Good morning. In this presentation, we are going to see how we can trade in MCX Gold today and for this week. Before looking into that, let us see what happened last week and what we expected last week. The chart which you are viewing is an 1 hour chart, which means every single candlestick represents 1 hour, and whenever I place a cursor on a particular candlestick, you can always see the date below. So the previous week, what happened on the previous week was that the gold was completely in the uptrend. You can see it was a very great bull run in gold market on the previous week. So there was no doubt for us that the market can sustain its uptrend for the coming week also. So that was a clear idea what we had. But this is the opening where the market opened around 30,140, and we know that the market was taking some support around 30,120, and for the long time the market was consolidating the same zone until Monday. You can see it is a very long consolidation, and the market closed around 30,160. It is a very long consolidation, and on Tuesday we can see that the market just opened higher, and it broke this previous week high of 30,220 and 40, and easily the market entered into 30,320. So it reached a maximum gain of 30,320, and you can see that again the market tried to break it. A failure pushed the market down at near the previous closing, and you can see the market closed around 30,200. So we were clearly saying that in our presentations, if you can go back, we follow two type of strategies which we call as when the market is trending up. So we use all our potential to gain maximum profit. When we see that the market is trending down, that is, it is not trending down in the sense, it is not that it is the trend is going to reverse. It doesn't means that trending down is that after losing its potential, the market will come down, and there may not be a market will consolidate. There may be some profit taking which can pull the market down, and it finds a support. There may not be much volatility. So that in those areas we had mentioned clearly, whenever you average that, the averaging zones will be higher. Book profit and exit and wait for the market to consolidate again, so that we can enter into a good trend again. This was our clear strategy we had mentioned many times, and you can see on Wednesday the market just opened below the previous day's price closing, and it's a spike down opening, and the market came down. So exactly like where the market took the support 30,120, the market took the resistance on Wednesday and it came down, but still we expected the market to be in buying because the trend is up. The expected price zone is that the market will dip and bounce back. That was our expectation, and the market came down till 29,920, and you can see it gave a good bounce back till 30,025. Of course, it's a 100-point profit. That is the reason why we always say that try to book profit for the average lots at regular time interval. So that can help you minimize your loss and maximize your profit. The next day also, that is on second, the market opened just below 30,000, just around 30,000, and you can see the market gave a bounce back until 30,120, where it found a resistance and pushed the market down. So clearly this indicates that the market is finding a good resistance of 30,120, and on Friday it is very clear that the price opened near 30,020. It was again supported by 30,020 and again supported by our average that pushed the market down and closed around 29,903. So this was the entire price action what happened. Other than this Friday price action, the market we can say that the market stayed with the trend because it always has provided a good bounce back. You can see came down till 29,020 and 30,120. So because for this entire week we didn't expect the market to go with big targets. We average and we book profit immediately so that we can protect whatever we had gained the previous week and also for this week. So Friday it's a bit clear, but we had not posted any presentations on Friday, so we don't want to comment on that. So it was staying just below the average, and it's a very good call also. But even then the market took here, you can see that 29,000 and 29,920, it gave a 100-point bounce back to show that it is always a possible potential buying zone. So today what we are expecting is that more or less around 29,920 we are expecting the price to open. So there are two options left for traders, because always it is up to the traders to decide what they can do. So there are two options left for the traders. The strategy A is going to be, we can call it, if you want to, you can call it as a planned strategy or whatever it is. Option A, go for a selling till 30,020 and place a stop loss around 30,000, just above 30,040, and wait and see whether the market is trying to put something above 30,000. So because this is the number, so we want to the average is here in the big numbers, so we can start trading on seeing the price action, what is happening in and around this zone. It is an one option. The second is that just hold on this 29,920 zones, so, and even if you can mark it also, if the price is not staying, if the price is not breaking below this, you can till this zone, you can go for buying. So if the price is breaking below it, below the 29,000, it gives us a confirmation that is market is very weak on strength, very weak on buying. So these are the two options: go for a buy till 29,000 at 29,900, or initially to test the market's buying trend completely. So or else taking a risk on selling with average, because 30,000 is always a good number to take a call. So these are the two options left, we left for you. So see the price actions and make your trading decisions accordingly. Thanks a lot for watching your video. Happy trading. Take care. Bye.